If you have some extra money in your pocket, you may be interested in investing it in Tesla. You may log into your investment account right away or a day later and place a buy order for the stock. However, not only Tesla, that would be the most wasteful way to buy any stock for investment. In this video, I will discuss 3 investment strategies for Tesla. I will discuss why they are good or bad for your portfolio. I have no doubt that once you understand these 3 strategies, you will be able to choose the best strategy for your portfolio. Let's begin. Investment strategy number 3, the Everyman Strategy. This is the strategy that I spoke about at the beginning of this video. It is a strategy that most people follow when investing in a stock. If you have $25,000 in your account and Tesla is traded at $250 per share, you can buy 100 shares by placing a market order. If you are a little bit experienced in the stock market and know what spreads and liquidities are, you may even use a limit order to execute the trade. You may be able to save 20 cents per share by doing that, but that still remains the most primitive of all the 3 strategies I can think of. What happens if the Tesla stock tanks towards the end of the trading day or in the post-market trading? What happens the next day when you wake up to see Tesla has lost as much as 5% due to missing the recent Cybertruck delivery target or discovering a defect in its highest-selling car? What happens if Tesla continues to decline month after that, along with the total stock market, and does not return to $250 in years? If Tesla falls to $125, you will lose 50% of your capital. It will be a very painful experience for you as an investor. When people say most people lose money in the stock market, they mean you. I am glad to think that, after watching this video, you will not follow this wasteful strategy anymore. Investment strategy number 2, the average strategy. Maybe someone like me has instructed you to lower your average cost by investing your money over a period of time. At $250 price rate, Tesla is 43% up from where it was only a month ago. You have to think whether you should enter the market now, as the stock looks expensive and may tank as fast as it rose following a piece of bad news. However, you have given it a good thought and believe that investing in Tesla now would be an excellent idea. You believe Tesla will rise further. You will buy Tesla at least at 5 different price points: $250, $254, $243, $239, and $255, and your dollar cost average will be $248.2, which is better than the current price of $250. What happens if Tesla continues to rise and does not fall to $239 in the next 6 months? You will buy the stock at a higher price, and your dollar cost average will be higher. What happens if Tesla falls to $230 after 6 months or after you have completed investing all your money? Your loss will be higher than it would have been had you bought all the shares at the $250 rate. What happens if the $250 price is the highest point Tesla reaches this time and continues to decline after that, falling to $220 after a year? You may complete investing all your money by the $225 point. You will lose money even after dollar cost averaging. As you can understand, this is not the finest investment strategy there can be and is. It poses many unanswerable questions. After all, you do not want to invest your hard-earned money with so many known uncertainties lurking around. Investment strategy number 1, the intelligent strategy. By following this strategy, you will invest in Tesla by not buying Tesla shares initially. Your plan is not to buy any Tesla stock at all unless you have to, but still maximize your gain from the stock. You will first sell a Tesla put option through your online platform or brokerage. You will receive a premium for that trade. That premium, your income, will be credited to your account immediately. That credit, in Tesla's case, will be higher than 10% for a put option expiring in 6 months. You will sell the put option at a strike price close to the current market price of the Tesla stock to earn a maximum premium. If the price of Tesla does not remain at that price or falls below it at the time of the expiration of the option contract, you will keep the premium and sell another put option close to the market price of Tesla at that time. You will continue earning money until Tesla's stock price comes down to your put option strike price. Once that happens, you will immediately sell a covered call option expiring in 6 months on your Tesla holdings at a strike price close to Tesla's share price at that time and earn, again, a premium of at least 10%. All this was theoretical. Let us see a live example so that you know exactly what I'm talking about. Go to the Nasdaq website and open the Tesla option chain. This is what the page looks like. Click the expiration date and choose January 2025. Confirm that the page shows January 17th, 2025 on it. Now, if you look on the right-hand side, you will see the last trade price of the put option contract for a $250 strike price. That is $35.16. That means if you commit to buy 100 shares of Tesla at $250 per share 6 months down the line, the seller of those shares will give you a premium of $35.16 per share. That is it. That is selling a put option. Now, if you look left, you will see the last trade price for call options. In case you were assigned the shares after the option expired at the end of the 6-month period, you can immediately sell a covered call option on those 100 shares. That means you commit to selling your 100 shares to an option buyer at $250 per share 6 months down the line if the price of the stock remains at $250 or above by the option expiration date. The option buyer will give you a premium of $43 per share. That is $4,300 for 100 shares as soon as the covered call option order is executed. If the share price of Tesla does not remain at or above the $250 strike price, the shares will remain in your account and you can sell another covered call option and earn another lucrative premium. You can continue selling covered calls on the same 100 shares of Tesla until the shares are called away. If the shares are called away because Tesla was traded at or above $250, you will still keep the $4,300 you gained as a premium. Now let us see the financial consequences of selling the put option first instead of buying Tesla shares directly at the current market price. If you are assigned the shares after 6 months at $250 per share, you actually buy them at $214.84 because you have already received $35.16 in premium. You can have mental peace by thinking you do not lose any part of your investment until Tesla falls below $214.84 per share. This does not mean you will not make any profit from Tesla. You will immediately gain a premium of around $25 per share by selling a covered call. If both trades go against you, which can happen in the stock market, it will still be difficult for you to lose any money from your investment in Tesla. The stock's price has to fall below $189.84 in this case to cause you any financial loss. But if you had bought Tesla at $250 a share, by that time you would have had a loss of $6,016 in your portfolio. That is like losing about 25% of your investment. You can sell both put and call options through your mobile app or online platform exactly as you trade stocks of various companies. Select the right contract number, in this case, 1, the right strike price, the right expiry date, and click Submit. You are done. Investing in Tesla through selling put options is the most intelligent of all investment strategies out there. The premium from selling put and covered call options will grow your capital fast and protect you against stock market volatility. Apply this strategy to any optionable stock you invest in and be a profitable investor. If you still find option trading complicated, subscribe to my channel to watch an upcoming tutorial video on selling options in the live market. In addition, if you want to do further research, read this article on Investopedia on selling put options, or this article on the Fidelity website about cash-secured put. Thank you for watching this far. See you in the next video.